Truworths is next. Of course, we know the brands here as well. Everyone's familiar with them, like the Truworths Man, YDE, Identity, which is similarly in that kind of fast fashion, bright and cheerful space. They recently acquired something called the Office Group, which Syd's going to tell us about. That's in the UK. Market cap, 47.7 billion rand. Price earnings ratio, 16.56. Dividend yield of 3.99%. So obviously Michael Mark there a long time, was going to step down, got a replacement, then the replacement said he wasn't going to stay for the job, so we must address that. But before we go there, just tell me where you see them in terms of the competitive landscape.
Like all retailers, sometimes you go through a bit of a speed wobble. Truworths did go through a speed wobble. I must be honest, I thought the half-year numbers for the SA business, in other words, compared to apples and apples, I think the numbers were damn good. I was very impressed with them. Agreed. I was very impressed with them.
I thought they were going to deliver much worse numbers.
Yeah. And also, Michael, the small acquisitions he made in South Africa strategically, I think they were very good and well-priced acquisitions.
So those were like Earthchild and Nachi and bits and pieces of things.
Nachi had gone bankrupt, but they picked it up for a song. Yeah. But it gives them quite a nice positioning in the kiddie space, which I know Michael, if he's listening this evening, I will remind him that many years ago I suggested he look at Nachi, and he told me that he didn't believe that kiddies was the place to be. Clearly he's changed his mind over the years, but that doesn't matter. The fact is the results were actually quite good.
And given the nature of South African malls, it's possible to have like one management team in one centre and to have all these little niche stores and everybody.
Well, he's got the concept of the Emporium, so he's got one huge space and he carves it up, much like a Selfridges or one of the other big departments would do. But it's worked for them, and that's what's important. And of course, his cost structure is totally different from everybody else.
No worries or concerns about the book.
His book's in good condition.
Seem to be good, unlike others.
The amazing thing is many people don't realize that when we have a rising interest rate scenario, the retailer benefits on day one because you increase your charge rate instantly. The bad debt can take a year or two to come through. So you actually get the instant gratification that goes straight through to the bottom line. And you're going to see that in the Truworths numbers to June and to December. To the extent that they've granted a bit of bad credit and credit goes a bit sour and what have you, that will only come through in 2 years' time. So for the immediate future,
looks more positive.
It actually looks a lot more positive.
Let's see how that reflects in the share chart. I got a feeling that we'll see a nice uptick there. So that tells the story, doesn't it? So 2015, they were already going through the wobble you referred to earlier back in 2013.
Absolutely.
And then seen to be impressing to the upside.
Yeah. Obviously you have, with them and the other one we're going to discuss, Fashini, you have one negative. Both of them have taken on a huge amount of debt.
For the offshore
and the debt.
And by the way, how do you rate that thing? It's like a biggest player in the UK shoes and that sort of thing?
I don't know sufficient about it to make a judgment call, but I am concerned the debt is in South Africa. They are hoping to use scrip dividends to bring the debt out and obviously generate profits from South Africa. Because
part of the thinking was you buy something in the UK, you have all that hard currency earnings, and because it's all going to work out well, you'll have solid cash flows to be able to service that. Because the debt is here in South Africa, is what you're saying. Well, that's a plus, though, isn't it? It would be worse if the debt was in the UK, and you were then having to repay pound debt with rands.
No, because the debt will ultimately be repaid out the profits of the foreign business.
Okay.
And obviously with a strong rand.
I see what you mean. So you're worried about the strong rand then meaning that you've got to bring back more pounds, puts us a little bit more pressure. But just for the benefit of the viewers, what sort of scale is this acquisition as a percentage of the total of Truworths? So we're talking about a 15% interest, 30%? I mean, how large is it?
No, it's 15-odd percent.
15-odd percent. So it's not going to be a key swinger.
No, not at all.
And as far as the management transition is concerned, Michael Mark, of course, is excellent. Just been there a long time. Obviously, they decided the new guy that they got from some French retailer wasn't a good fit, so they've gone back to plan B, which is to keep Michael there for a bit longer and then find a suitable replacement in time.
That is obviously a long-term issue. And, one only has to remind the viewers of what happened at a company, in the classic case I use is GE. When Jack Welch left, look what happened. There can be an issue. And Michael has been there a frightfully long time. I'm not saying I'm not saying that Michael's not a good operator. The numbers speak for themselves. But ultimately, Michael is going to leave, and we are delaying the inevitable departure, and the inevitable, what I think could be a speed wobble. But the way it looks at the moment, if you're looking at a 2-year view,
well, let's talk about that then. Let's go hot or not. I mean, it is looking a lot perkier than it was, relatively speaking.
It's looking a lot perkier, but if you look at that chart, that thing has spiked very, very quickly.
Yeah.
And it is a little bit of a concern to me that if I'm looking at the ultra short term, maybe it spiked a little bit too much. But if the share was slightly cheaper than where it is today, maybe I would certainly be hot on it.
Okay, so you're saying not hot, just more on a sort of valuation issue,
That's
just sounding a word of caution. Okay, good. I'm going to follow you on that, Syd.